This is TV18 and you're watching CNBC TV18.
Good morning, welcome to Bazaar Morning Call. I'm Lata, with me is Surabhi, and it's always pleasant when it is a Friday morning. While the mood may be pleasant, the Asian backdrop is a tad in the red. We are seeing almost all Asian indexes in the red, and especially metal-related companies in Australia. Australia has a lot of metal-related companies. They're all in the red. Likewise, the Dow and the Nasdaq futures are also in the red, and this despite Amazon numbers coming after market hours and producing a sizzling set of numbers. So let's keep that backdrop in mind, and let's not get carried away by the 2 days of FII numbers also. They could be F&O related. So we don't have too much positivity from the global markets. Yesterday, the Nifty shied away rather dramatically from the 15,000 plus mark. That also is something we should keep on board. Do we have enough today to pole vault over it? I think not. The cement numbers have been excellent. Titan has been in line. And NBFC numbers are a mixed bag. Some of them are really troubled, like AU Financiers. And even where it is good, like in Shriram Transport, you will have to look at the quarter ahead. You can't extrapolate the Q4 into Q1. So I'm not sure the results are giving us enough steam to vault over 15,000 just yet, especially when you are staring at a weekend. And you also have Reliance results coming thereafter. The results don't normally disappoint, but nevertheless, it's going to come after market hours. And finally, the poll results also will come only on Sunday. At the moment, the exit polls leave us none the wiser. I think even a politically not so conversant person like me knew that DMK will return in Tamil Nadu, knew that Pinarayi Vijayan is going to return in Kerala, knew that the BJP is going to return in Assam, and knew that it will be a photo finish in West Bengal. So we are none the wiser with the exit poll. My sense is for the market today is a wait and watch day. Morning, Surabhi.
Good morning, Lata. Well, I want to feel optimistic because, as you said, it's a Friday, right? And at least those Mumbai numbers are looking progressively better. And yesterday we had a decent amount of testing, over 38,000 tests conducted in Mumbai, and the numbers are down to about 4,000. Whatever, we are clutching onto straws over here. But in terms of the rest of Qs, I take your point. I think it's just, this is a market where there's still a lot of money coming in. And let's pull up that cash market buy figure, second day running. So 2 days on trot, we've got a buy figure. And I guess it's just the fact that liquidity is preventing a wider fall, as you're saying, though a lot of Qs are still negative. If you're going to look at the COVID numbers, and Ekta will present that data for us in the next couple of minutes, the numbers are not giving any comfort on a pan-India basis. The near about lockdowns or semi-lockdowns, they're only increasing. We know what's happening in Goa. So it's not comforting. Barring Mumbai, we're not getting comfort anywhere. UP has extended now. They're now locking down till about the middle of the week, around Tuesday or thereabouts. But for what it's worth, it's the fact that the international setup, international markets are not collapsing either, and that there's money coming in, and that's prevented a wider fall. But if this is the picture of things, and if this is how the global screen starts looking, and it's a sea of red, by the way, across Asia today, then perhaps our market will have all the reasons and all the excuses to correct. Let's just pull up the US 10-year and the dollar. The dollar has actually been ranged with a negative bias all through this week. And that continued at least till the last time sort of I saw the screen. There you go. The bond yield has started now inching up, and that is the first worry. We're back to 1.65 thereabouts. The dollar is still sort of behaving itself. So let's see if the global backdrop starts to turn murky, then the Indian market will have all the reasons to correct. But I guess otherwise, it's just this hope of, we'll see through this in the next 2-3 months. And then you don't not want to be in the market, I guess. And it's that factor, Lata, that's preventing people from booking wider profits or maybe a bigger fall.
I am not at all prepared for a fall. My sense is that the market is definitely going to look through, because everywhere in the world, people have overcome COVID. Yeah. Maybe our problem is bigger and certainly bigger than 3 times bigger than what it was in June of last year. But I don't think the market is in two minds at all, that there is light at the end of the tunnel. But, that end of is the tunnel 3 months? Is it 4 months? Absolutely. Is it 5 months? Yeah. So is only this quarter a washout? April, May, June a washout? Or is it a little longer? Because there are no vaccination stocks at the moment in Maharashtra. Today in Bombay, there is going to be no vaccination because there are no stocks. So if you thought that 30% of the population is going to be vaccinated by June or July, maybe you want to push that by one more month. Those problems can happen, which can disturb the second quarter. So, the market is only calculating about the when of the recovery and not the recovery itself. And I don't think they give a damn about which way the Bengal poll swings. I mean, it's a day's effort at the most. I don't see it changing the government policy or the economic growth or the earnings growth trajectory. But it is important. It is important for immediate market sentiment. So we will get you more analysis on that. For the moment, the equity call of the morning comes from Christopher Wood of Jefferies. He says greed and fear will start to raise the overweighted India in relative return portfolio back to where it was at the end of last quarter. He says the MSCI India has underperformed the MSCI Asia Pacific ex-Japan list by about 4% so far this quarter, after outperforming 2.5% in Q1 calendar 21. He says the Indian overweight will be increased by 2 percentage points to 14%, and this will be paid for by reducing weights in China by 0.5 percentage point and Malaysia by 1.5 percentage point. So that's good news for you.
Okay, there we go on the equity side. Let's move to the money market action now. Bhaskar Panda of HDFC Bank says US President Joe Biden hinted at another mega spending on education and other activities. He says US data also was positive, and bond yields rallied as fear of US inflation emerges among market participants again. On the domestic front, he says the INR appreciated against the US dollar on global cues and boosted by inflows. He says the ball is set and he expects the USD INR pair to trade just above the 74 mark in an intraday range between 74 to about 74.20.
It was clearly a very strong day for the rupee and a weak one for the dollar. On bonds, Bhaskar Panda says benchmark yields in India also rose a bit but is trading within ranges. He expects the same trend to continue as the 10-year benchmark bond yield hovers between 6.05 and 6.1. I think the Reserve Bank is managing that excellently well with some Operation Twist here and some OMOs there, so no worries.
Okay. Well, on that note, let's now look out for the global picture and, go behind all the negativity that's visible across Asia. Mangalam has the world view.
Well, Wall Street ended well yesterday, and the futures notwithstanding, they are actually under a tad bit of pressure yesterday. The S&P 500, that's the one that continued to hit a record high, and yesterday was aided by Facebook, which jumped 7% on a strong set of numbers. That's not all. In fact, we got some good numbers during the market and post-market as well. McDonald's, their sales have now gone to pre-pandemic levels, so good for them. And Amazon, the profits actually tripled to nearly $8 billion, and that stock will be in focus in today's trading session. The macros were also positive. We saw the US first quarter annualized GDP coming in at 6.4%, which is the best that we've seen since the third quarter of 2003. And on that, the US 10-year yield actually spiked around 1.65. So that is something that the investors will keep on their radar. What they'll also keep on their radar is the jobless claims data that has come in a tad higher than what the street was expecting. It's 100 days to Joe Biden's presidency, and the S&P has risen 9% in those 100 days. That's the best that we've seen in the first 100 days of any president since FDR in 1945. Across the Atlantic, European markets ended lower, but one stock, Nokia, when was the last time we heard about Nokia? That ended 8% higher on good performance. And German inflation for the second consecutive month is above the ECB benchmark of 2%. So that is something we'll watch out for too. This morning, Asia does not paint a happy screen. Across all indices, we're seeing a sell-off. And the SGX Nifty indicates that the start to May series could be on the back foot.
Okay, thank you very much for that, Mangalam.